Accenture is a company that's leaning into artificial intelligence with its advancements in offering courses and training, etc., to try and capitalize on the rising demand for AI. It does not want to be left behind. So, understandably, given its AI leaning, many investors are interested in Accenture stock. So, in this video, I'm going to highlight and elaborate the latest developments at Accenture and what it could mean for investors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So the company's management team acknowledging that fiscal year 2024 was a challenging market environment, but they led with significant investment and early leadership in what they believe will be the most transformative technology of the next decade, and that is generative AI. And you've been seeing that with all of the companies I've been following, what a critical role artificial intelligence is playing in industries worldwide. Accenture has made early investments and wants to be a leader in this category. And so they believe that when market conditions improve, they will be positioned to capitalize on that. So Accenture is helping clients prioritize large-scale transformations, and they double down on their strategy to be the reinvention partner of their clients. So when a business wants to make a big strategic shift, they go to Accenture for consulting, for know-how, for help in planning and executing on these reinventions. If they need a big strategy shift, if they need to sell a segment of the business or maybe make an acquisition, whatever the case might be, if they're trying to make a big shift, a big change, Accenture wants to be that company you go to for consulting for those services. And for the full year, bookings of $81 billion were up 14% year over year. That's excellent growth. Remember, bookings eventually become revenue, and bookings is an indicator of future revenue. So while the company's revenue only increased by 2% year over year to 65 billion, the bookings growth of 14% suggests that demand for its services could be increasing in future quarters. The company continues to take market share on a rolling 4-quarter basis against the basket of their closest global publicly traded companies. So when markets are challenging and when markets are in decline, one of the things you like to look at is your market share. Are you doing better than your competitors? Let's say the market overall is down 10%, but you're only down 2%. That means you did better than your competitors. And that's a good sign, because if you're in a market that's cyclical, that will eventually rebound. It means when the recovery happens, you're going to take more market share than your competitors. You're going to have better upside than your competitors. And it looks like that's where Accenture is. That's where they are confident in that when the rebound happens, they're going to be in a good position to benefit. So the company saying that they expanded their adjusted operating margin by 10 basis points and delivered earnings per share growth of 2% while continuing to invest in their business. Now, these are pedestrian numbers. These are very mediocre at best for a company like Accenture. Just 2% earnings per share growth on 2% revenue growth. These are not great numbers, but what the company is planning for and hoping for is that when this market recovers, that they will be in a position to deliver better growth. And they generated free cash flow of 8.6 billion on revenue of 65 billion. That's a free cash flow margin of more than 10%, closer to 15%, which is reasonable for a company of its size, and given the fact that they're making significant investments to prepare for this next generation of generative AI. That's a reasonable cash flow to sales ratio. Speaking of generative AI specifically, for the full year, they had $3 billion in new generative AI bookings, including $1 billion in the fourth quarter alone. So you can see the growth in this category. $1 billion in the fourth quarter alone, annualized, is a $4 billion rate, even though annually they only delivered $3 billion. So if they continue at the pace of the fourth quarter, next year will be $4 billion. But they're growing at a much faster rate than that when you compare it year over year. For the full year, they had 900 million in revenue. And so when you forward that out, when you annualize that number for next year, it's likely to be much larger than 900 million. So this part of its business is growing and it's growing rapidly, and it could lift the company's revenue growth rate above those low single digit rates of the most recent quarter. Part of the way they're doing that is by attracting talent. They've increased their data and AI workforce, reaching approximately 57,000 people, and their goal is to reach 80,000 people by the end of fiscal year 2026. This is an interesting strategy because there's going to be, and there already is, strong demand for workers with AI skills and data analysis and data skills because data is the foundation for artificial intelligence. And so by Accenture getting ahead of the game here and aggressively hiring people right now before the market really grows to those massive sizes that are forecast. Remember, the forecasts are that the artificial intelligence market will increase beyond $1 trillion dollars by the year 2030. As of this year, it's estimated to still be around $250 billion dollars. So this market is going to grow rapidly. Accenture getting ahead of the game, attracting talent before all of the other participants start to really ramp up hiring. The company finally returned to growth in consulting type of work for the first time in 6 quarters. For the first time in 6 quarters. So as I mentioned, they did say that it's been a challenging market, and it looks like the bottom is locked in, and it looks like there is turnaround working upwards in the market. New bookings in the quarter were $20 billion. That's 21% growth, faster than the growth of their full year bookings. Fourth quarter bookings were faster. So that signals again further evidence that the bottom has been locked in and we're going to see an upturn here for Accenture. Tech services and strategy consulting both grew mid-single digits and operations grew low single digits. So you could see where the growth is coming from for Accenture. It's coming from tech services, strategy, and consulting, and decreasing in operations. Their clients are seeking to reinvent using technology, data, AI, and new ways of working. And in 2025, the significant driver of growth will continue to be helping their clients with digital transformation, including building out their digital core and then using it to drive productivity and growth. This is the primary area where Accenture is positioning itself. As these businesses start to incorporate artificial intelligence into their business, they look to companies like Accenture to streamline that development. How do we integrate artificial intelligence into our business? And these can be companies like large companies like Home Depot and Walmart, Target, or it could be smaller companies that don't have teams internally to implement these changes and look to Accenture to help facilitate the transformation. Regardless, the demand from business to incorporate artificial intelligence is soaring, and Accenture looks like they're in a good position to benefit from that growth in their upcoming fiscal year. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.